To the Tier 1 Trading New York live trading room. Hope all is well. Hope you're having a great start to your day, or hope you've had a great start to your day. And welcome back. Real quick, can you guys see and hear everything okay? Give me a yes if that's the case. Perfect. Let's hop in. So, we know that we are in the dog days of summer. The markets are kind of in this slowdown. They're in a little bit of a rut, which is typically expected as everyone gets their last minute vacations out the way before getting back to business in September. We're also in a hold because we've got a lot of fundamental events coming up. And one of the events, one of the big events, is coming up today at 8:30. That is going to be our CPI report. Now, I honestly think, after doing a little bit more research on it last night, I actually don't. I don't think it's going to be as big as what many are expecting. It is a powerful number, but I don't think we're going to see as big of a reaction or a long-lasting reaction as one may expect. And for you guys that are new with news, understand that news is typically priced into the market well before it ever comes out. So when news events do come out in the market, they're looking at what's going to happen in the future. And the market already has an expectation. The market is not dumb. They are smart. They do their research. And I think the market is expecting a lower annual number. I think we're at 9.1 in June. I think the expectation is down to 8.7. Now, because the market expects that, if we were actually to get a drop, which is what the market expects, unless it's a very significant drop, they're going to kind of brush it off because it's like, hey, that's what we thought would happen. It's like, you take a test and you feel good about the test, you expect the grade, and you get a good grade back. You're like, ah, cool, right? Where the big moves come in the market is when we see a deviation from the expectation. So if we were to get a higher number, that would send the market crazy, in my opinion. Now, I don't know what the number is going to be. All we can do is make projections, but I don't think we are going to see it as much fireworks as you may think. If anything, we may kind of a short-term reaction. Everyone gets all emotional and excited, and by everyone, I mean mostly retail traders. And then we see the market kind of revert back to the mean. And you guys, if you ever followed news, you've seen that before, where the market spikes up and it does all this fireworks show and smoke and lasers for about 10 minutes. And then you come back later in the day and everything retraces and it's right back where it started. It's typically newer traders being taken advantage of, unfortunately. And I don't mean to laugh about that because I was one of those as well at one point in my time, but you'll see traders do it over and over again. I have the experience of coaching and working with thousands of traders over my years and really talking to thousands more that I've never coached. And the stories you hear about people doing stuff, not learning their lessons, and then doing it again is incredible. And it makes you believe that the number out there that 90% of traders fail is actually a little bit low. So what we're going to do today, we're going to take a look at some of the dollar pairs. We'll look at if there's something you want to take a look at, you can let me know. We'll take a look at the dollar pairs. We'll make some projections of some bigger term macro projections of, hey, if we go up, this is where we think we're going to go to. If we go down, this is where we think we're going to go to. Kind of set ourselves up in case we do see any moves, any breakouts of ranges, and then hopefully we'll be able to see. We'll watch the CPI report live here for you guys that are in a live room, and we'll readjust accordingly. We'll revisit accordingly. Disney's got earnings today too. Not to get on too much of a rant here, but the streaming sector is interesting, man. I've had some opinions on the death of streaming and the reversion back to the good old cable box. Everyone went unplugged and back plugged again. I think we may be at that tipping point, but we'll see. It'll be interesting. These a lot of the streamers that don't have anything going on for them in the background prior to streaming are losing a massive amount of money and being forced to raise prices, and people are being forced to make the decision where it's like, hey, I can't pay for 15 streaming services. I might as well just get cable again. So we'll see what happens there. But let's get started. Any place in particular you guys would like to get started today? I was just going to go to the euro dollar and work our way down. But if you have something, let me know. We can start there. Again, we're just going to look at the junk out there and make some projections on where we can go if price does this, where we can go if price does that. Good day for you guys watching on social media as well, streaming the first trade on YouTube, Facebook, Twitch, apparently, and LinkedIn. Didn't even know you can do that. All right, so let's start. We'll start in the euro dollar, and we'll kind of work our way down. Oil. Okay, we could do oil, Wade. I haven't looked at oil in a while. I try not to look at it. But let's take a look at oil. That's a good one from a bigger perspective. All right. Oil here, we're going to start here on the daily, the higher time frame, and we're going to work our way down. I want you guys to work through this process with me, right? So I've been ingraining this in your head all week, really starting last week, ever since we taught it to you. I.P.D.E, identify, predict, decide, execute. What is the first thing you notice with oil? Identify. What is price doing? What has price recently done? What would you guys say? I helped you out a little bit here. Get you guys used to this process. That way, when we let you go, you feel comfortable and confident doing it on your own. Becky wants to check out the EJ, Euro Yen. Yeah, we can do that next, Becky. If I forget, just remind me. My memory is pretty bad. So what have we recently done on oil, soil here? We have broken structure to the downside, right? Price action has been in a bullish trend. We topped off right here. We retraced, refused to make an equal high, came back to test the lows, kind of stair-stepped up again. Sorry about that line. That's a rogue one. Stair-stepped up again, testing the highs. And then on our last move down, it's a little bit choppier, obviously, we have broken resistance to the downside. Again, if I delete kind of these yellow lines, you'll see the big area right here where we tested, came here and broke to the downside. So we have a violation. Excuse me, the voice is going. There we go, workshop week. So we have violated a previous level of structure to the downside. We've identified that. What type of prediction does that allow us to make? Hey, Felix. Felix watching over on LinkedIn says, I only trade the pound dollar. Nice. We have a trader here, while you guys are answering that question about the prediction. We have a trader I work with for many years, Tony. He does more pairs now, but for the bulk of his career, only traded a single pair. Only traded a single pair. Only traded the pound yen. And we would constantly get newer traders in saying, like, how can you ever be profitable trading a single pair? And the answer is simple. You're really good at trading that pair. But it's understanding that there's a balance between different things out there, right? When you think about a portfolio, you can have a portfolio in a few different ways. So I'll take Darren, for example. If you guys aren't familiar, Darren is the one that found the cipher pattern. So, of course, selfishly, Darren decided only to trade ciphers for a good period of his time. So Darren was trading one thing on one time frame. Can you guess how many pairs he was looking at? How many charts he was looking at? He was watching 20 charts, right? Now, some of you are saying 20 charts, that's crazy. How can you ever pay attention to 20 charts? Well, if you're only looking for one thing, right? If you're only looking for one thing, it's a little bit easier. So that's one way to build a portfolio. You have a small amount of strategies and you just follow those or that one strategy on a massive amount of markets. The other way would be you trade one market, pound dollar, for example, but you can attack it in many different ways. You can break out, you can trade continuation, you can counter trend, you can pattern trade, right? And you can build a portfolio that way. So you can have small amount of strategies, large amount of markets, large amount of strategies, small amount of markets. Where you get into trouble is if you try to do a large amount of strategies on a large amount of markets, because that's where you get overwhelmed and confused and you miss opportunities. So certainly is doable for anyone wondering that. Yeah, so we've broken to the downside here. Our prediction, right? We identified a break to the downside. We broke a previous level of structure. Our prediction is that we're likely to continue lower. Now, there's three parts of this predictive process. One is what direction are we likely to go in? If we go in that direction, then where are we likely to go to? And then the last one's how we're likely to get there. That one's not as important. So the next question, if we're predicting a move lower because we are breaking or we violated a recent level of structure support, then where is the next place that you expect oil to go to? That's the next part, or the next question I would like for you to answer for me. The prediction process, the three-part process of prediction. And again, pay attention if you guys are new or haven't seen the training on this, right? This is how we streamline the process. You are going from step one, like a little board game. Step one, directly to step two, right? Step two, you have a mission to complete. You got to do this, blah, 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 blah. After you complete that mission, you go to step three, right? Following this process is stopping you from going all crazy, right? This is where you go all crazy and you look for buying and selling and selling and buying. And you make all these trading mistakes, right? We're eliminating you drifting off into space and doing dumb stuff, keeping you on this path going forward. Effective, efficient. So Orsi says structure swap around 81 even. Let's bring one of these lines down to 81 even. I'm thinking the same area, Orsi, right? How do we know this is a structure swap? Well, we know how to read a price chart, right? Again, we'll start here. Look at our ebbs and flows. New structure high, outside return. Nice little complex pullback there, ABCD pattern. New structure high, right? Outside return. Each of these new structure highs are resistance. This is resistance, right? As we push up, we break past this previous level of resistance. Resistance turns into short-term support. Support holds, and we continue higher. But you can see at this level, we have a period where price action acted as both resistance over here. I meant to draw an R there, excuse me. Price action hit resistance over here and then acted as support down there. Good place to expect another test, right? The market has proven this has been an important level price point in the past, both for the buyers and the sellers. So a good chance we can come back to that level as well. Right, I'm going to erase some of my junk here. We can draw some other stuff in there as well before you guys say it. You guys want to draw some fibs. Fibonacci retracement from your swing low to your swing high. We're at a 618 right now. No surprise we're holding. We don't have any type of fib level in here. We could perhaps do a fib inversion. That's going to be a little bit fancy, but let's just curious to see if that brings up anything. Don't worry about a fib inversion, guys. If you haven't learned about it, you don't need to. Nope, nothing in there. 127, a little bit lower, but not a lot of confluence in that area. So you have this zone right here. You have this zone right here between, I would say, 85s and the lows right here at about 82s, in which we can expect, or which we would predict price action to go to. So we've identified, we've predicted. Now the question is, how can I get involved? And typically we want to go down to our lower time frame here. Wade on YouTube is the one that was talking about this. He's looking for shorts as well. Wade, is there a specific time frame that you trade, Wade? By the way, Tubians, hit that like button. Is there a specific time frame that you'd like to go down to find your trading opportunities? I can kind of gear this specifically for you. But What I would need now is a fresh break, right? We've consolidated here and broke to the upside. That's not necessarily a positive sign here in the 4 hour. I'd love to see this consolidation and a break to the downside. So what I would personally need here is a fresh break. I would need us to take out these lows right here. I would need us to take out these lows. And then once we take out these lows, so Wade's looking on the 15-minute, we'll go down to the 15. Once we take out these lows here, then we can start looking for pullbacks or extensions down into that zone. So that's how I would handle oil. Now, Wade wants to go down to the 15, a little day trading action. Let's see what story the 15-minute chart gives us. It's going to be the same thing, but we'll get a little different story here. What do we have here? A little head and shoulders action that just broke to the downside. Yeah, it would still be the same thing for me. Now, there is a short-term opportunity here to trade these lows, but as far as an extension goes, yeah, I'd want to see these lows be taken out. So I want to see, the most important thing for me as far as predicting that move to the downside, as far as 85s to 82s go, I want to see 87s taken out. If we can take out 87s, I think there's smooth sailing down to that 85 to 81 zone, depending on how aggressive or conservative you are. Again, 85 being kind of the top of that zone, 81 being the low of that zone. There's an opportunity to short here. Again, we just broke out of this head and shoulders pattern. I'll draw this on for you real quick. Kind of a interesting one. We got like a double shoulder here, but this is a left shoulder. This is your head. This is a right shoulder. Head and shoulders patterns are a classic reversal pattern in the market. If you have a horizontal line of resistance or support, it's going to look like that. If you don't, it's going to look like this. But once we violate that neckline, whether it's trend lining or whether it's horizontal, then you would expect a move to the downside. Short-term expectation would be a retest of this zone right here. And then longer term would be a retest of the lows right here. So looking for about what is this? 88.5, 88.5, then down to 87.5. So decent opportunities on oil here. Any questions about oil or any of the analysis we did on oil before we move on? Live streamers, I'm going to kick you out in a little bit. But again, 2-week free online trading workshop. You have the option to join us and stay for the whole session, as well as get some free training lessons and some software. So take advantage of it if you want. There is still time. There is still time. 1244, please repeat prediction aspect. 1244, there's no way I can go back in time and know exactly what I said at 1244. Okay, prediction aspect. If we break, so the prediction aspect as far as when we were going through the I.P.D.E process, or like the specific, once we went down to the lower time frames? The higher time frame or the lower time frame one? That'll help. Which one? How do you have a timer? How do you have a timer on this? The higher time frame one? Sure. Going back to the daily. Yeah. Good luck in the trade, Wade. Going back to the daily here. Again, the prediction aspect, right? We violated. Let me change this. I'll erase this junk. And we go up here. We just took out our lows here. Previous structure lows, lower low, lower close. So violation of previous level of support to the downside. Prediction, if we're likely to continue lower, we're likely to continue lower to our next structure swap, our next ICE zone, which is going to be, I'll draw the zone in for you, which is going to be our zone right in here, right? The mesh point between our previous new structure high and then the area where that new structure high was violated and then retested before bouncing up. And then we tried to draw some fibs on. Fibs didn't really give us any help there. I guess the 127 inversion helped a little bit, but there's no Fibonacci confluence in there at all to help us out. So this is going to be one where you're basing it off of pure structure. Pure structure, which is how all my analysis starts anyway. Structure is first and foremost for me, and then everything else is kind of just a complement to it, right? Building on it. Structure is the delicious cake part of the cupcake, and everything else is the icing and the sprinkles and the garnish, and tasty. See, you still typing, so I'll hold on. I'll filibuster for a little bit more so we can get your question in before moving on. We're going to go to Becky's Euro Yen next. Look at you guys messing up my plan. My plan was to look at the junky dollar pairs and predict where we would go if we broke out. And we're starting with oil, a commodity, and then the Euro Yen. I don't mind. Again, I don't think there's going to be much. I think this is going to be an overblown CPI unless we get a real surprise. I think the market's going to go like, and then we're going to take our 13-minute break. We're going to come back and everything's going to be normal, except for like a long wick. Euro dollar, interesting. Becky, what are you looking at? Have you seen the euro dollar? Well, hold off. I think Fidelis has one more question. So if you do, let me know. The euro dollar, interesting. Becky, what's interesting about this? What is interesting about this? All right, YouTubers, live streamers, I'm gonna kick you out. We still get this question coming in, but it's taking a while, and I don't want to hold you here longer than I need to. I'll see you guys tomorrow, same time, same place, 7:30 for the live stream. Again, head over to the Bridging the Gap workshop. It's free. I don't know how many times I can tell you it, but you should be watching in the room instead of just from afar. It's free and you get free stuff. But I'll see you guys tomorrow. Hit that like button on the way out.